As I'm working with taxpayers, the IRS, I often hear come straight from their mouths, how did I get here? And well, usually it's a mistake that can easily be corrected, but they just don't realize they're making that mistake. So in today's video, I'm going to share 5 things with you to help you avoid getting a tax bill that you're not expecting and can't pay come this spring. The first tip I want to share is that you should check your withholding. And yes, I know you may see it on the internet, the IRS is putting it out, but it's true. You need to check your withholding. What this means is if you work for an employer, you need to make sure that your W-4 is filled out correctly. Now, if you have no idea how to do this, I've already done another video on how to fill out your W-4 correctly if you're married filing jointly. And if you aren't married, I've done a blog post to show you how to fill it out correctly. What the W-4 does, it tells your employer how much of your paycheck to withhold for taxes. Now, where people usually mess up is if you work more than one job in the year, if you're married, or if you have children. Because see, what happens when you're married is that your spouse's W-4 accounts for their income and their income alone. Your W-4 is going to account for your income and your income alone. So what happens if we have that we're married filing jointly, we have one spouse that let's say makes $50,000, and that's not going to start getting taxed for this year until the first $25,100. Same for your spouse. So what ends up happening is when we combine the incomes, we're starting at $100,000 before any standard deductions or anything, right? So then when we apply the standard deduction, we're looking at roughly $74,000 that's being taxed, but neither one of you have withheld for that amount. So it's very, very important that you check your withholding. Like I said, especially if you are married filing jointly, if you've worked more than one job this year, or if you have a child. You can look at the blog post I've done, the video, or the IRS has a very helpful paycheck withholding calculator. Okay, so let me check my notes here because I want to make sure I give you all 5 tips because we don't want you ending up with a tax bill you can't pay in the springtime. Next, and this is new for this year, if you have children, you want to go check your account transcript and see if you've been receiving the advanced child tax credits. So under the American Rescue Plan, which was signed in March by President Biden, the child tax credit has been expanded. So before it was $2,000 and now it's $3,000 for children 6 and up, and for children 5 and under, it's $3,600. So $3,600. What they've done to help American families is you are now getting an advance of that credit. So for the months of July through December, children who are 6 and up, their families are receiving checks for $250 each month. And of course, that is if you fall within the correct income thresholds. For families with children that are 5 and under, they are receiving a check for $300 each month. It's going to be very important that you track how much you've actually received, because at the end of the year, when it's time to file taxes, you're going to have to reconcile that with your tax preparer to report how much you actually got. Now, if you remember, last year when we had the stimulus checks, people were really concerned about having to pay those back. No, people didn't have to pay them back, but what happened was people couldn't remember if they received them or not. What happened with this is on the tax return, they said they didn't, and it held up processing their tax return. Or they said that they didn't get it and they actually did. So what they thought they were going to get in the form of a refund actually ended up being what they owed for that year. So we want to make sure we have the proper documentation so at tax time, we can give our preparers the right amount, okay? Number 3, check the rebate recovery credit, which you all know as the stimulus check payments. This year, 2021, we had a third stimulus payment go out after the American Rescue Plan was signed in March. This was for $1,400 a taxpayer. Just like I mentioned before, some people during last filing season couldn't remember if they got the stimulus check or not, or they didn't know the amount. It's going to be very, very, very important that you know if you received it and how much you did, because we are going to have another credit to reconcile that so that if you didn't receive it, you can get it back with your refund. What you can do to help yourself out and your preparer is go check your account transcript at irs.gov. It will show you if the check was dispersed, whether it was direct deposit, whether it got mailed. And then if you're looking at your transcript and it says that you did receive it, but you don't remember that, you need to go back and look at your bank statements to see if you really did or not. So what's happening right now, looking at checks 1 and 2, there are people saying they did not receive them, but then the IRS is saying, hey, actually you did, and that's where the discrepancy is. So we want to make sure, again, you can go check your transcript at irs.gov and see if you actually did receive the third stimulus check or not. The code on your transcript is going to be EIP, and I believe it's 3, but I know for sure it says EIP. EIP stands for Economic Impact Payment, which was also known as the stimulus check. Okay, so number 4. Folks, number 4, report all your income. If you don't report all your income, you're going to have problems at tax time anyway. You never want the IRS to have to go in and adjust your return and add more income or disallow deductions and credits. So I know all across the internet right now, we have folks just all in an uproar because they see the reporting requirement for 1099Ks, that reporting threshold has gone down to $600. So that means if you use Cash App for your business, if you use PayPal, Stripe, now when you hit $600 in sales, they're going to start reporting that to the IRS. And there are people who have an issue with that. But let me just tell you, you were supposed to have been reporting that money the whole time. The IRS wants to know about every red cent that you make, and you have to pay taxes on it. If you are a business owner, maybe you don't even officially have a business. You just sell goods or services as kind of, let's say, a side hustle. If you net $400 or more, that means you sell $1,000 worth of products and your product cost was $600. So you net $400 after all expenses. You are supposed to report that on your tax return. You are supposed to pay self-employment tax on that and federal tax. That is nothing new. The reporting requirement for the third-party merchant services, which are your PayPal, Cash App, Stripe, the credit card companies, they just didn't have to report it to the IRS. But what this is doing now is going to get you caught up because you haven't been reporting all of your income, and now these third-party services are going to be letting the IRS know that you did in fact make that money. You just haven't been telling the government. So number 4 was report all of your income. Number 5, you need documentation of all of your charitable giving. And you may be thinking, oh, that's not really relevant for me. I don't have enough giving to itemize. Well, last year, for the first time in my career, I've been doing this since 2011, the IRS allowed taxpayers who did not itemize to deduct $300 worth of their charitable giving. Now, those donations had to be cash, but $300 for married filing jointly or single, or if you were doing married filing separately, it was $150 for each spouse. With it being a cash donation, you have to have documentation from the organization that you gave to saying how much that you gave, that you did not receive anything in return. This is going to also be the case for next year. The government is going to allow you to deduct part of your charitable giving, cash donations only, even if you don't itemize. But you have to have documentation. You can't just go to your tax preparer and say, hey, I gave this money, because we don't want to get caught up with anything with the IRS either. So number 5, you need documentation of your charitable giving. Otherwise, if you claim that deduction, for whatever reason you are audited, of course, knock on wood, but if you are audited, the IRS will throw that right out if you don't have documentation of it. So tip number 1, because we want to avoid this tax bill, okay? You need to check your withholding. If you're not sure how to do that, like I said, if you're married filing jointly, I have recorded a video for it. If not, I've written a blog post, or you can use the IRS paycheck withholding calculator. Also, if you're making estimated payments, that is going to count in checking your withholding. You're just manually doing it and not telling a company to do it for you. Number 2, check your advanced child tax credit payments. At the end of the year, the IRS is going to assume that they've made those advances to you. You want to already have documented from your account transcript to show your preparer what you actually did receive and what you didn't. Otherwise, if that information isn't correct, it will delay the processing of your return come spring of 2022. Number 3, check to see if you got the third stimulus payment. If you did not, make sure that you have proof of that from your account transcript. Once you have that, when you're filling out your client organizer, meeting with your preparer, make sure to give them that information so they can help you claim that for next year and get it back with your refund. And if you don't typically get a refund, what will happen is that credit will go towards your tax liability, because tax credits wipe out or eliminate tax liabilities dollar for dollar. For example, if you have a $1,400 tax bill and then you have this $1,400 tax credit, it will cancel that out and bring you to break even at 0. Number 4, make sure you're reporting all of your income. You don't want to get caught up when the 1099-K is issued, because I guarantee you, if they catch you not reporting income, that's going to open up a whole new can of worms that you don't even want to have to deal with. Now, if you're thinking, oh my goodness, I can't use Cash App anymore with my family members, this is for businesses. It's not for peer-to-peer transactions. It is for business owners that are using these different apps and third-party merchant services to sell goods and services. It is not for the average person. Everybody is not going to be getting 1099-Ks. No, that is not what's going to happen. All right, so if you are just doing peer-to-peer transactions, you don't have to worry about it. Don't get caught up in all the hubble bubble with everybody saying that Uncle Sam's coming for people. Nope, not even talking about you. My business owners, my unofficial business owners, where you're selling your art or you're getting your babysitting money on there, you, my friend, are getting a 1099-K, and you need to make sure you're reporting all of your income. Next, last but not least, make sure that you have documentation for all of your charitable giving, even if you don't itemize, because the IRS is going to allow taxpayers that don't itemize to deduct part of their charitable giving this year, but you do need to have documentation of that from the organization that you are giving to. So I hope that these tax tips have helped you. And if you have any questions, feel free to drop them below in the comments. And I am so sorry, I just realized, if you don't know me, my name is Timalyn Bowens, and I am America's favorite EA. I'll see you all in the next video.